Hello. In this video, you'll learn how payroll accountants determine state tax withholdings. Many states except Alaska, Florida, Nevada, New Hampshire, South Dakota, Texas, Tennessee, Washington, and Wyoming, as well as their localities, apply taxes in addition to federal income tax, Social Security, and Medicare. New Hampshire does not charge a payroll tax, but does assess taxes on dividends and investments. All states except for the 9 I just mentioned withhold income tax from their employees, and many apply their taxes as well. For instance, employees in the state of California pay state disability insurance, or SDI for short, of 1.1% of gross pay, to a maximum wage of $145,600 in 2022 and $153,164 in 2023, in addition to the personal income tax PIT that the state levies. Like federal income tax, California's personal income tax amounts vary by income level, pay frequency, and marital status. And California also offers the wage bracket and the percentage method of determining the personal income tax amounts due, as we used for federal income tax. In contrast, Pennsylvania charges a flat 3.07% on all employees for its state withholding tax. You can find additional state income tax information in Appendix D of your tax. New York ranks as the highest state in per capita, state, and local income tax. The marginal tax rate in 2022 ranged from 4% to 10.9%, depending on income. And many localities charge income taxes as well. In 2021, the maximum tax rate was 8.8%, so a significant increase. Workers who reside or earn income in New York City pay a tax that ranges from approximately 3.078% to 3.876%, in addition to any federal and state income taxes. If a company operates in more than one state, it becomes increasingly complex to decipher state income tax requirements. Some states require the collection and remittance of income taxes based upon all wages earned within their state. For example, if a paper mill worker who lives in Florida is stationed at the St. Mary's, Georgia location, the employer could be required to remit the employee's income taxes in Georgia. Entertainment employees, such as actors, have state taxes withheld for each location they shoot the movie in. Another mandatory tax is local income tax, and payroll accountants need to be aware of any local taxes that apply to their business. Denver, Colorado has a local tax called the Occupational Privilege Tax, also known as the HEAD tax. The OPT, or Occupational Privilege Tax, is $5.75 per month for employees and $4 for employers of any business with any activity in Denver, even if the employee or business does not exist or reside in Denver itself, and wages exceeding $500. The local income tax is applied after any 3 tax years. Let's look at a few examples of calculating the net pay when state income tax is being withheld. Our first example is for Angel, who receives a salary of $850 per week at his job in Joliet, Illinois. Angel is married, filing jointly. Box 2 is not checked, with one dependent under 17 and is paid weekly. We will use the wage bracket table in Appendix C to determine federal income tax. The Illinois state income tax is 4.95%. Angel also has pre-tax deductions of $50 for insurance and $50 for the 401k. Let's calculate this net pay together. We'll start with a period wage of $850 Next, calculate the federal and state taxable wages by subtracting the 401k and insurance contributions of $50 each from the period wage for $750. This is the amount we will use to calculate the federal and state income tax withholdings. Now we'll use the federal taxable wages to look up the pure preliminary tax withholdings in the wage bracket tables. Be sure to choose the weekly payroll tax table and find the correct row that includes the wage of $750. For Angel, who is married filing jointly, it is the standard withholding because he did not check box 2 on the Form W-4. That's not the final amount yet. Angel also gets credit for having one dependent under 17. Each dependent under 17 is worth $2,000 annually, so we divide that amount by 52 for the weekly amount of $38.46, which brings the tax withholding to 0. Next, we calculate the FICA taxable wages by subtracting the pre-tax insurance contributions of $50 from the period wages to arrive at $800. We multiply the $800 by 7.65%, or can also separately calculate the Social Security and Medicare taxes for a total of $61.20. So what's the next step? The next step is to calculate the state taxes. The wage base for state taxes is the same as the federal wage base. So that's $750, which we multiply by 4.95% for Illinois. The only thing left to do is to calculate the net pay by taking the gross pay and subtracting all withholdings and deductions, including the 401k and insurance, for a net amount of $651.67. The second example is for Leah, who's a full-time employee in Austin, Texas, who earns $4,420 per month and is paid semi-monthly. He's married filing jointly with one dependent under 17 and has indicated step 2 checkbox withholdings. There's a qualified health insurance deduction of $50 per pay period and contributes 3% to a 401k, both of which are pre-tax deductions. For additional withholding amount for step 2 is $150.75. So what's her net pay? We'll calculate this together. We'll start with the period wage of $2,210 and next calculate the federal and state taxable wages by subtracting the 401k contribution of $66.30, which is 3% of the $2,210, an insurance contribution of $50 each from the period wage for a total of $2,093.70. This is the amount we will use to calculate the federal and state income tax withholdings. We then look up the amount of $2,093.70 in the semi-monthly tax table. We find the correct row for the wage and the correct column for married filing jointly with checkbox 2 on Form W-4 check. The amount is $182. We now calculate the credit amount for the dependent exemption, which is $2,000 divided by 24, goes to my monthly payroll, and come up with a credit of $83.33, which gives us a net amount of $98.67. We then add the additional tax withholdings for step 2 of the Form W-4 of $150.75 for a grand total of $249.42 for federal income tax. Next, we'll calculate the FICA taxable wages by subtracting the pre-tax insurance contributions of $50 from the period wages to arrive at $2,160. We multiply the $2,160 by 7.65%, or you can also separately calculate the Social Security tax and Medicare taxes for a total of $165.24. There's no state or local income tax withholding, But all we have left to do is subtract the 401k and insurance contributions for a net pay of $1,679.04.